Hello everyone, good morning. Hello everyone, good morning. Let me welcome us to another exciting morning market review by Rally 3 and of course Rally Academy. So this is the session we normally have every morning by, by 8 a.m. Monday to Friday. This session we get to analyze the markets for you and of course give you tips and tricks on how to navigate the market profitably. Once again, let me welcome us. This is Emmanuel reaching you from the beautiful city of Port Harcourt. Guys, I don't know if you can hear me, but I believe in my spirit that you can hear me. Please get to the chat room and then just type you. I can hear you. Get to the chat room and then just type I can hear you. Wonderful, wonderful. I can see you there. Means you all can hear me. I want to believe last week was a profitable week for you. Now, of course, this week also promises to be profitable, right? Promise to be profitable. But one thing you must do is you must continue to learn on the market. You know, the market is very dynamic, right? Very dynamic. So every day the market, the charts always change. So as a trader, you also need to be dynamic. Now, without much ado, welcome again. Those of us joining us, this is Emmanuel Odogu, reaching you from PHCT. This is our morning market review. One solid hour of morning market analysis. One solid hour of morning market analysis. We do this every morning, 8 a.m. to 9 a.m. And we look at the currency market, the commodities market, the metals, the commodity, the agricultural produce, the energy market, we look at indices. So we look at all of these things, right? Analyzing the market for you such that you always come out profitable, right? So guys, let's get started right now, just like we always do. For the newbies joining us, we always have newbies joining us. For the newbies joining us, what we do here, we always like to start by looking at the market from the looking at the events, right, for the week, how this event is going to affect the market. So the website we normally get to look at those events that can affect the market. Just like I always say, fundamental analysis have no respect for technical analysis. That means you always want to consider fundamental side of things. So I will just share my screen with you right there. So let me share my screen with you guys. I want to believe all of you can hear me once again. Welcome. Let me share my screen with you so that we can So guys, sorry for that glitch in the internet connection. I've been able to share my screen. Check if you can see my screen. Type FF on the chat room if you can see my screen. Just type FF. Please type FF. I've been able to restore the sound. Okay, Joshua, I can see you there. Thank you very much. So let's move on very fast. Those who are joining for the first time, this is actually the last week of the month of August. It's going to be a profitable week because we are starting it the right way by looking at fundamental events, right? Now, this website is www.forexfactory.com. So for the newbies, you can get to this website by just typing on your address bar www.forexfactory.com. So you get to see the events that will unfold during the course of the week, right? So this is for Monday. This is for Tuesday. This is for Wednesday. So quickly, we always like to focus more on the high impact news, what we call the high volatility news, the news that has a very high impact on the markets, right? Okay, it is such news I normally say have no respect for technical analysis. That means it can bruise past your technical setups. So for Monday today, you can see with me, there is no red high impact news here. There is no high impact news here. So that means Monday today is a very good day to focus on your technical analysis, right? To focus on what the chart has to say. Focus on what the chart has to say. Now for tomorrow, we have red news, USD, on USD by 2 p.m., 3 p.m., consumer confidence. On Wednesday, we have red news. But for today, let's just save time by jumping straight to the chart. Okay, thank you. I'm back to this is Monday 21st, rather. It was the wrong date. This is Monday 21st. So even for this Monday 21st, I think the only red news we have is the news on the yuan, right? The use on the yuan. So let's jump straight to the chart so that we can look at what the market has for us for today. So let me just share my screen with you guys again. So I've been able to share my screen. Please check if you can see my screen. Guys, I've been able to share my screen. Check if you can see my screen. So I am on USD index. Just type chart on the chat room if you can see my screen. Okay, thank you. You can see my screen. We can see. Thank you. All right, now this is the chart. Of course, this is the financial market. So we are looking at USD index, just like we always do. We'll try to look at the index. The index measures the strength of the United States dollars in a basket compared with other major currencies like the euro, the pound, the Japanese yen, strong currencies of this spinning planet. Okay. Now, from what we can see here, we can tell that this instrument is basking and trading towards the upside, as you can see. Remember, what we always do is market structure analysis. So the instrument keep breaking structures towards the upside. All right. So this is what we call upward trend, right? So this is what we call upward trend. So if you look at the recent price action here, the market USD index gave us what we call relatively equal highs here. Relatively equal highs on an upward trend is what we call like a magnet. the market will usually be drawn towards it. Now, this relatively equal highs, most persons will normally think the market has put in or have printed an equal high. So that would be a strong resistance. So let's start selling. Yeah, you can start selling from up there and you're also going to make profit. But guess what? The parent trend, the major movement of the market is still upward. So you can see that the market was attracted back towards that level and it took out that relatively equal high. So just for future purpose, so you can see how much the market went towards that high, because liquidity, market liquidity will be trapped at this level, and that's liquidity from the sellers. Okay, so the sellers, their money will be trapped here, their stop losses will be trapped here, and that's what the market went for. Okay, so that means in trading, you always want to start by trading the direction of the trend. Very important. Direction of the trend before you start talking about support and resistance, or before you start talking about demand and supplies. In this case, this is a supply zone, right? But the market went towards that supply and took it out. So guys, USD index is still on an upward trend, right? So we can see that after this market took out this high, let's see what happened next. So if we draw Fibonacci from the low here to the high, so you can see that the market has successfully traded below our discount, right? So that's why we have all these choppy candles here. And of course, the market is trading in this area. Now, this area the market is trading is actually my point of interest, right? So because it has gone below my discount. So this is my point of interest. Point of interest to do what? Guys, guess what? The market is already on an upward trend. So if it's a point of interest, it no longer, it will actually be a point for a buy, right? A point for a buy. So I want to be buying the dollar, right? We want to be buying the dollar because we're already seeing high demand here. So this is an area of demand for the dollar. So we want to be buying the dollar. Now for the scalpers in the room, just like I always do, I always like to look at this other financial visuals website, to confirm the strength of the dollar. Okay, so you just get to this place by typing at your address bar. You just type www.finviz.com. Look at it here. Finviz.com up here, please. Finviz.com. So you get to see the relative strength of the dollar. Okay. So look at where the dollar is right now. So the dollar is here, right? So it's not all that weak. It's somewhere at the middle. So that is why we saw that it has retraced very well, and of course it has gotten to our point of interest, right? So maybe during the course of the day, just maybe dollar might just move a bit towards the left-hand side. Of course, currencies towards my right. For those of us seeing this website for the first time, currencies towards my right are the weak currencies, right? Like right now, JPY is very weak, so it's a good time to dump or to sell JPY, the Japanese yen. And of course, for this morning, we are seeing that euro is basking. Euro is very strong, okay, now for this morning. But guess what? During the course of the day, late mornings, early afternoon, all of this will change, right? So we get to see volume being pumped into the market. We get to see the US session coming up. So most of this will change, okay? So guys, let's go back to the charts. So having looked at USD index, let me start by looking at Euro USD. I think we have enough time for today, right? We have enough time for today to do good analysis here, okay? So for Euro USD on the H4 time frame, let's look at what the market has to say for us for today. So this instrument on the H4 time frame has been trending downward, as you can see, right? But we are seeing something just at the bottom of the trend. Now look at this candle. This candle is what we call an inverted hammer. Of course, that's a pin bar there, but the shape of the candlestick and the position indicates that the buyers were rejected, right? So the market was busy rejecting buyers. And the confirmation to that is this full-blown candlestick we are seeing here. The name of this candlestick is called Marubozu. That's a continuation pattern, right? So it came up just immediately after this candlestick, okay? And that's to show that this market might just continue trading to the downside. Now, see, all of this is happening on a verified support, right? So that's kind of an indecision there, right? Go forward, go backward, kind of thing. Okay, you're asking if you can get the website, Amarain. Okay, the website is www. Guys, let me just do this, finbase.com. So I've given you the website there. Okay, so just go back and check. Now that's kind of an indecision there for the H4 time frame, right? Because we are already seeing candlestick pattern telling us the price wants to go down. Of course, all of this is happening on the support. And guess what? On that same support, we are seeing look at this candlestick, and the market has been going choppy, right? That's to show that the volume has been reduced, right? The volume has been reduced. All of this choppy candlestick means that there is a tug of war happening on that level. Of course, that's what we expected. We expected the market to go through a kind of a reduced trading volume because traders will be like waiting to see what the support will do. But now let's go down to let's drop to H1 time frame. On the H4 time frame, we're already seeing that the market is started trading towards the upside now. But guess what? We saw on that FinViz, let me take you there very fast. We saw on this FinViz, we saw some kind of strength in euro, right? And we saw also kind of weakness in the dollar. Don't forget, so kind of strength in euro. Now this is for those that are scalping, please, okay? Not for swing traders, for scalpers. And you know, most traders are actually scalpers, especially new traders, okay? So if I see scalpers in the room, let me see your hand up. You can see so many hands to go up. All right, then. So this instrument is clearly trading towards the downside, as you can see from here. So this is where it broke structure towards the downside. So that's how you know downward trend. This is where it broke structure towards the downside. So this is the high that was responsible for that break of structure. That becomes a strong high, right? Of course, that's what we call resistance. Okay, now after that break of structure, of course, you expect a retracement towards the upside. It gave us that retracement. Then after that, this becomes the new low. But guess what? The market actually broke that low again towards the downside, broke this low towards the downside. So clearly speaking, you know, it is good to anticipate, to trade what you anticipate on the market, right? Very good to trade what you anticipate, but it is best to trade what you see on the charts, sir. Best to trade what you see on the charts. So, and what we're seeing on the chart is that the market is trading towards the downside. So this is a retracement towards the upside, right? But that retracement is still what is happening here. Now, ideally, this retracement shouldn't trade above this high because it was this high that was responsible for breaking this low that caused this break of structure towards the downside. Okay, so I'll just draw this zone here and I'll paint it as my strong high, right? As my strong high. So what I want to see is I want to see this market respecting this high, right? And turn from here and start trading towards the downside. But guess what? If this high is mitigated, if the market breaks this high, I'll be looking out for a buy. Now, we are not just calling buy or sell signal yet, right? So we are telling you how we are getting the buy. That's teaching them how to fish. That's how we're getting the buy. So this high was responsible for breaking this low, becomes a strong high. So the market is trading towards the high. And of course, that's what we call a resistance, right? So if this market can trade above this high, sir, I'll be looking out for a buy. If the market can trade above this high, I'll be looking out for a buy. Then, of course, this other high here can be my take profit target, right? So this other high can be my target point for my take profit. So if this price can just trade above this high, if this market can trade above this high, anywhere somewhere here, I'll be looking out for a buy. then I'll target this level here, as you can see. So a buy position will be best and be sage, right? If the market can just trade around this area, as you can see, around 1.09005 to 1.08957. So around this zone, just anywhere above this high, sir, I would like to buy. Then if I buy there, my take profit will not be, of course, just around this area here, around this area. Okay, so my take profit would be 1.09216, right? So I'll be using a tight stop loss for that, because there is wisdom in using the small stop loss, so that it will increase your risk to return ratio, right? And if you have a good risk to return ratio, even if you're trading and your win rate is 50 to 50, that is 50% win rate, you will still be in profit. That means anytime you make profit or anytime you win more than anytime the price hits your stop loss. So that's the wisdom behind using a small or a tight stop loss. Guys, are we following? So my stop loss will just be, you can see all of these choppy candles. So I'll just place my stop loss somewhere here, 1.08651. So I would like to enter a buy if Euro USD can break structure, right? So breaking this high, trading above this high is what we call change of character. So if you see a change of character, just trading above this high for intraday traders, for scalpers, yes, I would like to do a buy, right? Remember what we saw on Finviz also support this claim, right? So I would like to do a buy here, 1.08957. So around this region, I would like to do a buy. Guys, that's for Euro USD. Say sorry, the voice is my problem. So you cannot hear me? Someone is saying he cannot see my screen. Is it true, guys? Okay, fine. Thank you. You can hear me now? We can. Thank you. I can see you there. So I don't know whether I'm too fast. Let me try and slow down a little bit. Maybe that's why you say you cannot hear me. All right. Now this for Euro USD, time is running very fast. Let's do GBP USD as our custom is, right? Now what I did here is just for a buy, right? But guess what? This instrument is still trading towards the downside. It's trading towards the downside, right? So if this break or change of character did not happen, if the market not trade above this high, then I'll be looking out for taking this into the downside, right? I will still be looking out for sales, right? Because the instrument is still trading towards the downside. As you can see, it's still nose diving downward. So guys, GBP USD very fast. So on GBP USD, I would like to look at what the big money is looking at. I will switch over to H4 time frame. Now on the H4 time frame, now this instrument has been almost trading sideways, as you can see. So on the H1 time frame, because one thing you want to do is to make sense out of the chart, right? So get to position your chart in such a way that you can see what the chart is saying, right? You can see what the chart is saying. Now on this, we can see that the market has been rejecting this level here. There has been a huge rejection on this level. So that's what we call verified support there. So the market has been rejecting that level. So if the market is rejecting level, it means there is a huge buy orders, right? Waiting here, okay? Of course, if you look up, there's also a verified resistance. So that means this market is actually trading inside a range. So the market has turned to a range bound market. So a range bound market, the wise thing to do is to trade only at the tops or at the lows or the bottom of the range. So you only trade only at or at the buy on the supports or a sell at the resistance. But if you look carefully, the market is right now somewhere at the middle, right? At the middle. So a buy position will be good if the market can do a retracement further to this level. So guys, I would like to buy it. Because guess what? That's exactly what happened when the market was somewhere around here, right? Or somewhere around here. So when the market was somewhere around this middle, it retraces down towards this demand zone. Then you hit your buy trade there, going up becomes profit. So I'm expecting such opportunity here. Okay. So if the market can trade again towards this area, I would like to do a buy. So buy position will be envisaged at so you want to do a buy, okay, that will be a buy limit. So buy limit is a penny order, right, for buying at a much better price. So guys, guess what? A better price is a lower price. Okay. So if you want to buy at a lower price, then you should be using buy limit. Someone is saying this screen appears too busy. Is it true? It's not too busy. Only what we have here is this color. These colors are support and support and resistance area. Okay, so it's not too busy, sir. It's not too busy. So so a buy position will be envisaged. So you want to do a buy limit. So set a buy limit on your trade right now. Somewhere around 1.27045. So a range actually 1.26920. So any of this range of price, you can do a buy there, right? So around this area, you can do a buy from here down here. You can do a buy around that area. But if the price is not fall towards that area, then you can wish to sell. So a sell limit will be good at the top here, right? So a sell limit up here. So you can see this market has been ranging for days, right? Market has been ranging from Wednesday, for Thursday, for Friday. So there's a possibility that the range can continue for today. That's how you trade what you see on the charts. Remember, you always have stop loss, right? To always protect your trade. So it's best to trade what you see on the chart. So if the market trade towards this area, so I would like to do a sell. That would be a sell limit. Sell limit is selling at a much better price. A much better price for a sell is a higher price. So when the price trade higher towards this area, I would like to do a sell. Please, for the buyer, of course, stop loss, stop loss will be positioned just below this area. So stop loss will be at, for the buy, please, I've gone back to the buy limit. Stop loss will be positioned at 1.26783. So if you're buying somewhere around here, around this support zone, right? Demand zone rather. So your stop loss would be 1.26783, and of course your take profit will actually have to be at this resistance. But guess what? Sometimes the price may just be stalled at the middle of the range. So the middle of the range should be your take profit 1, and your take profit 1 can actually be your take profit. Okay, so 1.27403. So 1.27403, that will be your take profit. Okay. Now for the sell, you want to sell here, same thing, your stop loss just above this high, this recent high. Then of course your take profit at the middle of the range also. Now let's look at one more currency pair, then before we can now switch over to commodities. You're asking which instrument it is. This is GBP USD, guys. This GBP USD, okay? So let me look at Euro JPY here. Euro JPY. Let's see what Euro JPY is doing. Let's take some trade here. Now on Euro JPY, we can see that this instrument has been trading towards the upside, right? Until we had this break of structure. Now, please, Euro JPY will be the last currency pair I'll look at before I will switch over to commodities. Okay. So look at this break of structure here. This market trading below this low, is what we call break of structure, right? So that's traded below this low. So the market is trading downward. But guess what? For scalpers, for intraday traders, we can see that the market is gradually trying to trade towards the upside, right? So it's putting up volume towards the upside. So on the H1 time frame, we saw this big bullish engulfing candle here. So this candle is what we call an engulfing candle, right? A big bullish candlestick, right? Big enough to cover the bearish candlestick there. Now, afterwards, we saw that the market puts in a retracement. And of course, from that retracement, the market is now trying to push towards the upside, right? It's trying to push toward the upside. But remember what we saw, what we saw on the on this area. Remember, we saw that the euro is much stronger than the Japanese yen, right? So scalpers can take advantage of that. The euro is much stronger than the Japanese yen. So that means I would like, for those that are scalping, would like to take an instant buy there, right? So that's an instant buy there. Then, of course, since I'm scalping, I would like to use, look for the next level of resistance. This is next level of resistance as my take profit level. So I just took an instant buy, a scalping trade on Euro JPY. Then my stop loss will just be below this low. Or I can use this low, but this low will be too fast. So let me use this low, right? Now let's look at gold, please. We don't have much time. This is scalping trade, please. And we're doing that because on the chart we saw a big bullish engulfing. And if you check very well, the market has retraced 50% of that movement. This is what I mean. The market has retraced. So from here, from here up here, so you can see the market have retraced. The market have retraced into this area, right? So it has gathered enough buys, if you like, enough demand has happened here. Okay. Now we have looked at Euro USD. We've looked at JP USD, and this is Euro JPY. Then, of course, let's now switch over to. Let's look at gold. Then also we consider some other commodities before we enter indices. So let's look at gold. You have been asking for gold, and now I'm bringing it to you. So let's look at gold. So let's look at gold from the big money side of things, and that will be the higher time frame. Let me look at the H4 time frame. So even the blind can see, wonderful. The market is massively trading towards the downside. So you can see how my moving average 50, and of course 21 are all fanning nicely towards the downside, right? So, and of course, the 21 has always been acting as a point of dynamic supply, right? Dynamic supply. So that means whenever the price gets to 21, the price will get rejected, and of course, that rejection will cause a steer, a push towards the downside. That's what has been happening. Let me look at D1. Someone asked me to look at D1. Let's also consider D1. So guys, look at this price action. Crazy, dangerous. So if you look at this candlestick here, right? This candlestick here, this is a rejection for the buys, right? This is rejection for the buys. This this means the price was rejected towards the upside, right? So it's an inverted hammer, what we call a bearish pin bar, right? It's a bearish pin bar because it signals the bears are massively coming into the markets. Okay, so citing this now, subsequently, if you cite this kind of candlestick on your charts, and of course you're seeing it on a higher time frame because it has more effects, right, on the charts on the higher time frame, right? So on the lower time frame, it may just constitute noise, but on the higher time frame, it has more effects. So right from this candlestick, sir, that's when we started seeing that these sellers are massively taking over the market. Okay, and of course that's what we have been seeing to this one. So up to this point, it has not stopped. Okay, but for we intraday traders, scalpers, so let's go down to a much lower time frame. So we have seen the H4 time frame. H4 time frame. On the H4 time frame, the market has been trading inside a range, right? So the market has been building for itself a range. Guess what? This is what normally happens after or at the tail end of a long downward movement like this, right? So this is when we say the market is going to consolidation, right? So it is accumulating orders, and afterwards, guess what? It will break out. It can break out towards the upside, or it can break out towards the downside. Now, but H4 time frame is not enough, so let's dive down further to H1 time frame where we can see things more clearly. So my bias, what we call directional bias, will still be to sell, right? Since we are not the controller general of the market, I mean, since we don't control the market actually, so my bias will still be to sell. Now, but I'm not just selling inside the range. No. I can only sell at the supply zone up here. I can only sell at the supply zone up here, or at a break. Now, if you notice from the beginning, I told you, don't forget, I told you this. Whenever the market is trending in any particular direction, now it can be trending upward. That means breaking structures towards the upside, or it can be trending downward. That means breaking structures towards the downside. The market usually puts in or prints these equal highs and equal lows. Always look out for it. It's a place where the market is trying to dump money, right? And of course to pick up money, right? So look at this equal. I showed you this from the beginning, and look at it here again. The market printed this equal lows, right? What we call relatively equal lows. You get to see it, EQL, relatively equal lows, right? So if the market prints relatively equal lows, you may want to write this one down. If the market prints relatively equal lows on a downward trend, guess what? Remember, when the market is trending downward, the lows are the targeted liquidity. So the first will have a double low here and they are equal. It means the market will target it. Yeah, the market will actually target it. So that means this market may just be targeting this low. Yeah, you can take this one to the bank. The market may just be targeting this low, right? May be targeting this low. So that's why my bias for gold is still for it to trade towards the downside. I wouldn't want to buy. Buying is off the of what I want to do for now. Okay, so I would like to sell at this high here. So I'm not trading. I mean, I'm not doing any instant execution now. No, I would like to wait for the market to trade upward towards this what we call supply zone, yeah. Or I would still like to wait for the market to break this level or to target it this level. Then I would like to continue selling from there. All right then. Now let's jump to a much lower time, 15 minutes time frame. Let's see what we can see there. Now, instead of waiting for the market to actually break here. So we can look at for on the 15 minutes time frame, we can look at for areas of inefficiency, areas where the market might be drawn towards, so that it can start doing the sell immediately. Okay. Now, one of such area I have seen on the chart is this area here. I've seen this area on the chart, right? Now I've seen that area. Remember, my bias is to sell. So since I'm saying I want the market to be drawn towards this area, from what the chart is telling us, the market should be drawn towards this area. Now one can take advantage of that move, right? One can take advantage of that move, okay? So inside this area, and that would be around so that would be around 1 point, so that would be around 1890, right? 1890 to 1891. Okay, so gold around 1890 to 1891. A sell limit will be envisaged, or will be best placed at that point, right? Of course, your stop loss should be above this high, right? Of course, your target point will be this relatively equal lows, guys. Now, there are three ways you can enter this trade. Number one, to be aggressive. Remember this guy called Ray Dalio. You should know him. One of the CEO of one of the largest hedge fund firm in the world, Ray Dalio, said you have to be aggressive to make money on the markets, conservative to save money. So you have to know when to be aggressive. Okay, knowing when to be aggressive is now, please. Now, if the market trade inside this area for the aggressive ones among us, so you might want to start doing the selling here. Again, 1890 to 1891. If you sell there, of course, we are saying this market will be drawn towards this equal lows. So your take profit will be here. And of course, you want to use a small stop loss there, or even above this high here. Okay. Otherwise, the second method is to wait for the price to break these lows, then you start selling. The third method is to wait for the price to give you, if the price trade towards this, as you can see, it's a range, right? If the price trade towards this upper bound of the range, then the sell can start from there. So guys, these are the three ways you can take advantage of the directional bias of gold that is trading towards the downside. So let me look at for questions. Okay, you're asking for oils. So let's also look at oil. Wow, look at this price action. Very beautiful. Most persons have never seen price find out nicely and very smooth towards the downside. Very beautiful, guys. I hope you actually took advantage of this move, right? So that's why it's good to always trade with a lot size that is commensurate with your account. In that way, you can afford to stay longer on the markets, right? So guys, let me do oil right now based on popular demand. Oil right now, please. So remember, just like what we always do, we look at it on the H4 time frame. Let's see what the big money is also looking at. So clearly this instrument has been trading towards the upside, as you can see, before we had this reversal. It's actually a reversal. Why? The reason why it's actually a reversal, there is a small break of the market was able to take out this low, and also it took out this low. Look carefully, you see that the market took out this low, right? So taking out this low means that the market is shifting towards the downside, right? Now, but guess what? That low that was taken out, so we had something like this, a push towards the downside, what we call impulse towards the downside, and of course this is what we call retracement towards the upside. Then this is what we call impulse again towards the downside. So this is what we call retracement again, impulse towards the upside. So clearly you can see that this market is trading towards the downside very clearly, right? But guess what? This low was supposed to go lower than this low, but it did not, right? So we are seeing a failure swing there. We call it failure swing. It has failed to go lower. Now, guess what? The next move went higher than this high. And of course, it was also going higher than this side. So that means oil price has gradually shifted again, what we call market structure shifts, has gradually shifted again towards the upside. So this is the very first earliest sign of the market shifting towards the upside, okay? So on the H1 time frame, so you can see all of those drawing coming out very clear here, right? The market have shifted towards the upside. Now, citing this first shift here, this is where the buys were started from, right? So because if you look carefully, look here, this was the high, protected high. The market was supposed to respect this high, but the market did not, right? So it bruised through that high with this movement towards the upside. So it bruised through this high, as you can see. Then of course it retraced for a lower price, and of course start going up. So oil price again have started trading towards the upside. That's what we can deduce. So 15 minutes time frame, let's look at possible entry levels, and of course how we can take advantage of that move. Now in the 15 minutes time frame, we can clearly see that the market is pumping towards the upside. How do I know? It keep breaking structures towards the upside. This is a break of structure here, break of structure here, break of structure here. So the next break of structure is this level. This is a high, target high, right? Of course, that's the high we are heading towards. Okay. Now, if you look at this oil clearly, now if you have good money, if you have good capital, you will be you are advised to enter this trade. Okay, not with small money or not with small money actually, right? So this trade will be a good trade, guys. So let me go in with a much smaller lot size. The reason is if the market does any much retracement again, because if you notice the market have left our demand zone on this lower time frame, right? So if it retraces further towards this area, I would like to if it retraces further downward, then I would like to enter more buys, guys. But if it did not, and it pick up from there, why not? I'm already on the trade. Remember this word they call FOMO, fear of missing out. So by entering a smaller lot size, you have destroyed your FOMO, fear of missing out, right? So you have not missed out of the move. So when that move happens, you are still in the move. But guess what? If you rotate, so on that trade, of course, you know, our stop loss have to be below this low, right? Below this low. And of course, I'll do a take profit, right? That is minimum 2 times higher than the, so I'll just look for the next proven resistance. Of course, that's more than 1:2 there. So which is a good trade, guys, a good trade, a good trade. Now that's for oil, guys. We looked at oils. Somebody's asking how much money is good money. Wonderful. Now every social concept is a relative concept, guys. So even with money in your account, it's also relative. Okay. So if you have 100K and above and you want to take the oil trade, right, with 0.01 to start with, then of course, if the market gives you much more opportunity, you can enter more. You're asking me to review the oil again. We don't have time. We have to look at indices, right? We must have to look at indices, guys. Now we are recording these, guys, and also we are also live streaming this on YouTube, right? So if you miss anything, you can just get back to YouTube. Just search for Rally Trade on YouTube. Then of course, you can just do where to like the video, also do where to subscribe to the channel, right? So that anytime we upload new videos, you get to see it. Now, please, on oil, I did an instant buy, right? I did an instant buy on oil. So that's what we did on oil. Now, let's look at D30 based on popular demand, D30. So on D30, on the H4 time frame, we just have barely 8 minutes left. So let's So on D30 on the H4 time frame, this the market is clearly trading towards the downside, as you can see, right, guys? But guess what? If you look carefully on the H4 time frame, you can see this candlestick, guys. You can see this candlestick. You can see this candlestick, right? This candlestick is what we call a pin bar. And the pin bar is appearing at a very nice area, bottom of the trend, guys, where we normally have high demand. Bottom of the downtrend, where we normally have high demand. So this candlestick is a rejection, guys. It has showed us a rejection of sales or further bearish move, right? And of course, we are already seeing this massive, big candle, right? That is pushing towards the upside. Guess what, guys? We're on the H4 time frame. That means if this candlestick closes as a bullish candlestick with little or no shadow, right? That candlestick is called a continuation candlestick. Now, if you look at the bottom, it has already established a very tiny shadow there. By shadow, I mean the wick, okay? So you want to keep your eye on this, right? It has established a very tiny shadow there. And of course, if this candle close in the next, how many hours now? So you can see the time here, right? In the next 3 hours, if this candle close as bullish candlestick, now with little or no shadow, upper shadow, I mean, then it means this candle is called a Marubozu candlestick. So a Marubozu candlestick will serve as a confirmation pattern for this candlestick we're seeing here, for this pin bar, this bullish pin bar. So this is a bullish pin bar. We have choppy candlestick, and this is the confirmation. Then of course, after that, you may want to now enter your buy. Now the buy is not going to be just intraday, right? It can be a very long buy. It can be a very long buy, right? It can be a very long buy. Remember, the constituents of D30 are companies, right? They are companies, okay? They are companies. And there are websites where you can see whether these companies are doing well or not. So I'll drop my number at the end of the session, so you can get through to me. There are apps, there are applications that you can use to see if the constituent companies, right? The constituent company like Mercedes-Benz, Mercedes is one of them, SAP is there, whether these constituents are doing well. So if they are doing well, then for a swing trader, you may want to enter a buy and stay longer. Remember, on a long term, indexes or stocks always do well. So if it's the opportunity for a buy, you want to dive in. So guys, that's for D30 on the H4 time frame. So we just hope that this instrument, now see, that's one, by saying if this candlestick close bullish, that's the Marubozu. Then secondly, if it close bullish candle as a bullish candlestick, remember, if you watch before that candlestick, this is the candlestick 0, this is the candlestick 1. So the candlestick 1 is bearish. If the candlestick 2 closes as bullish, that will give us what we call a bullish engulfing candlestick, right? A bullish engulfing. And bullish engulfing is also a bullish signal. So guys, we are seeing several signals, what we call a confluence of signals. And whenever you have confluence of signal like that, guys, it will give you enough confidence to take your trade, right? Now let me jump down to a much lower time frame, guys. I hope you guys are getting value from this, okay? And I hope I'm not too fast. So let me just jump straight down to H1 time frame. So don't worry, I will also look at US 100. Now, on the H1 time frame, we are already seeing the big bullish candlestick, right? And of course, it's just remaining less than 3 minutes for this candlestick to close, right? So you can see the time here, just remaining less than 3 minutes, right? So if that candlestick closes, of course, it has already signaled a bullish movement, right? So we have bullish engulfing here. We already have another bullish engulfing here. Now for the aggressive guys, you can enter a buy straight. You can enter a buy straight once this candlestick close, right? Once candlestick close, you can enter a buy straight. Or for the conservative guys, you may want to wait for a 50% retracement back into the candlestick, right? Right. Now, I would advise that one, right? I would advise once the candlestick close, you wait for 50% retracement back into just below our 50% discounted price there. So somewhere here, I would like to do a buy from here. Now that's for conservative trading, guys. Okay. Now remember, for the swing trading, I've given you a signal. I said on the H4 time frame, wait for the candlestick to close as a bullish candlestick. That will serve as a continuation pattern. Then you can now start doing your buy. Okay. Now let me rush fast so that we can close by 9 on the dot. US 100 based on popular demand. Guys, US 100, D30, most of them move in the same direction, right? So we saw this massive dump, right? We saw this massive dump towards the downside. Then of course, right now the market is about trading towards the upside. But it is still a downward trend, right? It is still a downward trend. That means if you must take advantage of it, you must have a stop loss. Stop loss is a very minimal risk that you can take, that you can sacrifice, of course. So this can be your stop loss down here, or this can be your stop. But if you look carefully, we have a bullish pattern here, right? So this is a bullish engulfing, right? About 65% efficient, right? Because the body of the candlestick of the bullish candlestick covers the body of the bearish candlestick. Okay, so once this, so same thing here, also same thing here, please. It is just the same analysis, right? So we look at for this candlestick to close as a bullish candlestick, right? So that will now serve as what we call, that will serve as engulfing candlestick, bullish engulfing candlestick. Okay, then of course you may want to start doing your buy. If you do your buy, please, your stop loss should be here. Okay, you should have a stop loss to protect your trade. Now let's dive down to a much lower time frame, H1 time frame. Let's see what the H1 is telling us. So this H1 time frame, I can clearly see that the market actually gapped this level, right? So this is what we call a gap, an inefficiency, right? So the market gapped this level. So maybe it's just trying to fill up that area. So in that case, if this market fill up this area and turn from here, the way we normally note turning of the market is what we call change of character. Okay, so if you cite a change of character, I mean the market start putting up lower lows, right, towards the downside on a much lower time frame, then the sell might just want to continue, right? You may just want to continue the sell. So if it turn from here and they started it down, they want to continue the sell. But on the H4 time frame, if it closes as bullish, right, then of course that will signal a very strong movement towards the upside. So guys, you want to trade carefully, right? Observing all of these rules. Remember, patience is trading. Waiting while all of this happens is also trading. Okay. Okay, let's look at the room for questions. So guys, all of this has been recorded. All of this has been recorded. So you want to also, so I can see you there. Thank you for that. Compliments, guys. I'm looking at your questions now, your comments and all of that. Please, you can get back to YouTube if you miss any of this, so watch it and learn from me. Remember, you have to learn before you earn. Okay, very important. So you want to go back to YouTube and of course watch all of this again. So guys, thank you very much. Let's draw the curtain here. To be a good place to draw the curtain, Let me drop my number. My name is Emmanuel. And of course, this is 09026264507. So you can reach me. I can give you an application that you can use to track the D30, the US30. You can use them. You can use it to track the constituent companies. I mean, the company that constitutes the 30 best companies, right? The US30 and all of that. So if you see they are all green, it means that they are doing well, then you want to buy. So if you see that they are all red, then it means that they're not doing well, their performance are low, then you want to sell. So guys, I've dropped that for you. Thank you very much. Please do well to join us again. If you have not, if you don't have good money in your trading account, please do well to do a top up, okay? Get across to your account manager, do a top up on your account. Fund more. What is the money doing in the bank? It's not doing anything. Take the money from the bank, put it in your trading account. When it's the opportunity, you take advantage of it. That's how we grow, okay? So guys, thank you. So do well to join us again tomorrow for another exciting session again. 8 a.m. in the morning.